Today I made $2,000 trading stocks in the stock market, and in this video I'm going to give you an in-depth breakdown of all of the trades that I took so you kind of have an understanding of exactly what I was thinking and why I did what I did when I was taking these trades. If you don't know me already, my name is Greg. I'm a full-time day trader. This is what I do for a living, and haven't really had a losing month in probably around 2 years, and it's due to my risk management and my ability to limit my losses and make sure that my winners run big. My win rate is not amazing. It's not anything special. I honestly have anywhere from, let's say, an 80% win rate on the good days all the way down to a 30% win rate on the bad days, sometimes even less. But the thing is, I rarely lose money because my losers are so small, my winners are so big. So let's just hop right into the video. I'm gonna kind of go over exactly today's trades and how I made money today. So let's get started. So as you can see, I have my Thinkorswim platform opened up, and this is probably my favorite platform to trade on, one of my favorite brokerages. And if we go to the P&L for today, if you zoom in, you can see that the P&L in the day, this number right here, 2,080.90 cents, that is how much I made today. And all of these other numbers show the overall P&Ls of each symbol. So each line here shows a different stock. The stocks are on the left side of my screen. I could probably pull them up, but I'm trading on a 49-inch monitor, so it's really wide, so it doesn't show them right now, but I'll show you in just a second. But as you can see, today I traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 different symbols. I'm a very highly active trader. I do high frequency trading, so I traded 16 different symbols, and all these stocks that have a parentheses next to them are losing trades. Those are losers, and all the ones without the parentheses were winning trades. So as you can see, most of the trades I took today were actually losers. I really had a bunch of small losers, but notice how all of them were under $200. I had a $190 loss here, $180 loss here, $100 here, $100 here, $50 here, and then a bunch of little ones. But look at the winners. The winners, this one was about $1,900 winner, and the other one was $700 winner. So my win rate, honestly, was not that great at all. You know, I lost most of my trades, but the losing trades were really small and the winning trades were big because I managed my risk and I use risk management. So let's go over exactly all the trades that I took today. We can start off with the Akeba. So whenever I look and I find a stock in the morning, I look at the daily chart. Before the market even opens, I look at the daily chart and I make my morning watches. Now this Akeba, I noticed, was moving up. The past 4 days was accelerating, was moving very strong, and then today it gapped down. It opened down to 229. So after moving up all this price, today it gapped down and opened below these two candlesticks highs. Now what this tells me, the reason I trade gaps is because it allows me to understand the psychology of other traders and investors that were in the stock. So the fact that this thing moved up 4 days in a row told me there is a lot of buying. There are people who bought in down here, up here, up here, up here. People bought in all the way up to there. Now when the market opens, imagine what they're thinking. Imagine how they're feeling when they check their portfolio, their brokerage or whatever, and they notice they are down on their position. All these people who got in up here are now automatically down. And what that does is that creates fear. That creates a lot of fear that this thing may drop even more. What does that make them do? Sell their position, and that's going to drive price even lower. So that was my mental bias before the market even opened. Now the thing is with this one, I actually didn't short it. There was an amazing move. You could see on all the time frames in the morning. Right here is a 1, 2, 5, and 15-minute time frame. You could see on all time frames it respected the gap and actually did move lower. There was selling, and it was selling. Now another thing that I did, I missed this move lower. I wish I caught it, but I did catch the reversal. And the reason I played this as a reversal was because it dropped really hard. It dropped a lot. There was a spike in volume. When there's a spike in volume after a large move of consecutive red candlesticks, it tells me that the last group of sellers have sold and that there's not enough selling anymore to drive price even lower. So that was one reason I decided maybe I can catch the reversal of this play. Another reason was if we look at the daily chart, I looked at the 20-day period moving average, and remember, the 20-day period moving average also acts as a level of support and resistance. I knew that there was going to be a lot of buying down at this 20-day period moving average, and that there's a chance that price will not be able to break through it. Having that in mind, I watched the stock and I saw that it started, respecting this 20 MA. And if you guys don't really understand the simple moving average and how I use it, make sure to go watch all my other videos in my YouTube playlist to get a better understanding and then come back to this video. But yeah, basically the 20-day period moving average, I saw it was going into a level of support. I noticed it was accelerating, a lot of selling, and I watched the volume spikes. And what I decided to do here was to play this as a reversal setup on the 2-minute and the 5-minute time frame. So I saw it touch 195, and I saw there was a huge spike of volume on the smaller time frames. I ended up deciding to hop into this position on the 1 and 2-minute time frame. I actually used the 1-minute and the 5-minute, and what I did was I saw this move lower and I decided to get in over this first green candlestick high and had my stop loss below the low of the day. So I had a very tight stop. I entered here at around 198 and had my stop here at around 194. So about a 4-cent stop. And what price ended up doing was it ended up trying to move higher. It came back in, almost touched my stop. I hopped in here with about like 15,000 shares, I think, around 15,000 shares as a long. It almost stopped me out and then ended up bouncing back up, and it put in a reversal bar. Now, yeah, I ended up going all the way up. My first target was the 20 MA on the 5-minute time frame because the 20 MA, like I said, acts as a support or resistance. So I had my first target. I ended up taking some profits using the 5-minute bar by bar management down here at 204. I took like a fourth of my position, just trailed a little bit. And then once I noticed that it wanted to continue higher, my second target became the 200 MA on the 15-minute time frame. So then I grinded higher. I ended up adding a little bit more to my position here at 207, and it ended up moving higher and touched my target. I trailed half of my position at 214, and then the back half I did 15-minute bar by bar. And bar by bar management really just means trailing your stop loss to the bottom of the past candlestick. So I was trailing at 15-minute bar by bar at this candlestick, raised my stop to 206, and then after this candlestick finished forming, I raised my stop to 209, ended up moving up, and then this candlestick formed, came in, took full profits at 209, ended up being a $1,900 trade. So that's basically that. And another reason that gave me that bullish confirmation that this was going to go up, besides the fact that this was accelerated, selling was running out, and the 20 MA, was also the market at the time. The Qs, the QQQs, what we look at for the overall market, and the market was just extremely bullish the entire morning. So it also gave me confirmation that the market wants to power higher. What's pushing this AKBA lower is, the gap, but eventually the selling will run out. And with the market pushing higher, the fact that it's getting into support, this thing was going to eventually get bought. So I hopped in and I made about 4 Rs on the trade. I risked $500, made about 2,000. At one point I was up right here at about 214. I was up $2,500, but I ended up giving back 600, which is fine. I was just trailing my stop. So that was the first winner of the day. The second winner of the day was a PDD. Now this wasn't even a gap. Kind of just found this on my watch list, but I played this as a base breakout. If you look at the 1 and the 2-minute time frame later on in the day, I noticed that this stock was literally penny basing, which means it was sitting at the same penny for literally like 20 minutes. And this stock is $130, so that means there was literally like no volatility, and price was stuck like a sandwich at this price at around $1 and $130. It was just sitting there. And whenever something bases this tightly, whenever something consolidates and moves sideways, the tighter the base, the more likely it's going to explode once it breaks that base. Because think about it, the reason something is stuck at a certain price is because that means that there is a wall of sellers who are suppressing the price from moving higher, and there's a wall of buyers who are suppressing price from moving lower. And it's a very equal battle between the sellers and buyers that are literally smashing price in between each other. Sellers won't let it move higher, buyers won't let it move lower. And the longer it does that, it's almost like a rubber band that's getting pulled. And as soon as one of them wins the battle, price will snap. And that's exactly what happened. I ended up not even getting that much size. I was going to add, but it happened so fast. I got 1,500 shares, and this thing literally popped $1.50 in a second. I made $730 on this trade in 1 second. Swear to God. If I took profits at the highs, I would have made, I think, 1,600. But it literally happened so fast. It literally popped and then dropped right away. I just took profits, so that was a quick winner. But yeah, it also did have the setup, not the greatest gap, but because of the tight base, I decided to play it. It also had good time frame alignment. All time frames had the 20 MA curling under price, which is something that is very important. We want to see that, there's an uptrend in price, 20 MA is curling underneath price. So that was my two winners, as simple as that. Now let's go take a look at some of the losers. So Neo, I think this was a scalp in the morning. This wasn't really off of the gaps. I was reading the level 2 order flow. One of these times I hopped in short and then it just flipped on me really fast. I had like 7,000 shares, so it flipped 3 cents, and I lost about $190. Quite unfortunate, but that's all right. Not a big deal. This was actually, I think, in the morning this happened. I think I hopped in literally like down here because it looked so good on the level 2. I thought it was going to continue lower. I was really just reading the order flow, and then it flipped. Got out, $190 loss, whatever. The other one was the Huya. This thing actually also flipped on me in the morning. If I zoom out here a little bit, what did this thing do? Yeah, so just like the Neo, I hopped in this short off the open, was really fast off the order flow. I was a little too aggressive and ended up just flipping on me, and I lost $190. Little scalp, little mistake. I think I need to be a little more passive off the open. Off the first minute, I lost like $400 off the first minute of the day. That was my mistake. We also got the STLA, lost $100. This thing ended up gapping down today. I got in, not really the greatest gap. Thought it was gonna move lower. Hopped in here off the open as well as a base breakdown. Went in my favor, moved higher, got in. Yeah, my entry was below the base, so I can show you. I got in. It was kind of, I think my mistake today was literally just being way too aggressive off the morning. There wasn't a lot of follow through. Market was unpredictable, but yeah, I entered below this minor level of support. Had my stop loss up here, and I got in once it broke that little minor consolidation right off the open, went in my favor, started moving higher. I noticed that the market at the time, right off the open, if you look at the cues, this was right off in the morning. We're extremely bullish right off the open. Market was literally flying higher this morning, as you can see right here. This was the cues right off the open. So started and went down. I got in, started flying higher, and at that time I was looking at the STLA. I had my stop loss, but I ended up just killing it a little above break even. So around, I think, 12.10. I killed it just because I noticed that the market was moving higher and I didn't want to, risk taking a full R loss on this. So I ended up just killing it because the market was looking higher, and the market kind of acts as a magnet sometimes to these stocks. If the market is flying higher and you're playing something as a short, it's going to act as a magnet and it's going to pull it up with the market. Because think about it, buyers overall, if they notice the entire market sectors, all sectors in the market are moving higher, even if the gap looks lower, the market, people will just buy because they're overly bullish with the market. They believe that this stock will move up because the overall market will move up. So that was kind of what happened there. I kind of killed it because I was afraid it was going to stop me out, and it was just not good timing with the market. And it ended up, it would have fully stopped me out. I would have lost around $400 or $500 on this if I didn't kill it early. So I limited my loss. And yeah, that was that trade. And the final big loser I had today, another $100 loser, was a WBD. This was also a scalp. I ended up hopping in, I think, right here on this little breakdown. I ended up adding to it because it looked really good on the level 2 down here. And then I ended up flipping. So a lot of my losses today were just a little dumb scalps that I took. Usually in a good environment, we would get a lot more follow through. Stuff like this would continue dropping with the level 2, but today there was just not a lot of momentum in the markets, a lot of choppiness, and for scalping, that's not good. You want things to be moving, not chopping around like this on the chart. So really, the environment was just not good, and I should have been a little more passive, but I'm pretty happy with my losses. I did the math, I took about $600 or $700 worth of losses today, which is fine. I made in profit roughly, let's say 1900, yeah, like 2600. So I ended up making, $2,600 worth of winning trades, 700 worth of losing trades, which is still too much, but it could have been a lot worse if I lost a full R. So yeah, that just goes to show that the win rate doesn't matter. It's just you have to be very smart with how you use risk management, and you need to make sure that your winners are big. A problem a lot of traders have is that they don't have these big winners because they are way too fearful when they are in a winning trade. They are way too fearful that they're going to give back profits, which makes them get out of the trade too early. And when they're in a losing trade, they're super hopeful that it's going to go back to their break even, or it's going to move back up and make money when they're down on the position. So they may even add, and they end up getting bigger losing trades. It should be the complete opposite. You shouldn't be fearful when you're in a winning trade. You should be hopeful that the winning trade is going to be a big one. You should be fearful in a losing trade. You shouldn't be hopeful in a losing trade. You should be fearful that you're going to lose more money, and you should be able to manage your risk and kill the trade before you lose even more money. So yeah, it's really just following your trading plan. I'm going to make a separate video on how to create a good trading plan where you can make big winners and have small losers. And when it comes to risk management, I do have some other videos in my YouTube channel. So make sure to go check those out. And if you guys like these types of videos, make sure to engage so I know. Put a comment down below, put a like, let me know if you have any questions. Hit that subscribe button if you enjoy these types of videos, so I will continue making them. And yeah, I appreciate it, guys, for watching this. Let me know if you have any questions, and I will see you in the next video. Thank you. Peace.